Good afternoon. Today we'll be interviewing David Andolfatto, economist in the research division at the Federal Bank of St. Louis. So thank you, Mr. David, for being here with me.
It's a pleasure to be here, Jouell. Thank you.
Likewise. I was interested innately because you're in the banking system and you're in the feds. So you're pro crypto and Bitcoin, and I wanted to hear your back end story on how you got in the space, where you see this space going as far as regulations and if it will scale into the economy. So my first question is, we've heard a lot of House members that are saying Bitcoin's an unstoppable force, and other House members that are kind of like have no clue about it. So how are the Federal Reserve banks ensuring they are educating government and House members on the economical power of Bitcoin and crypto?
Well, I'm not sure if the members in the Federal Reserve System are expressly educating directly representatives, but I know that there are study groups. I know there are people working at the board and various reserve banks that are publishing things on crypto and trying to educate just the broader public. And hopefully these representatives are some of the consumers.
Right.
So yeah, I don't think there's any specifically kind of meeting with people to discuss or educate them on in this space.
Nice. So how did you get in the space? I read that on your blog. You were anti a little bit, and then you realized this isn't a scam. It's not just a bubble, and it's staying still in the economy. It looks like it might end up being a digital currency of the future. What led you to these conclusions?
Well, I mean, like a lot of people, economists, we were initially skeptical. I mean, this idea of private currency issue is an old idea. And very often in the past, they have been associated with kind of scam events. So, an economist is kind of naturally of on guard for these things. And Paul Krugman in particular, I recall being very, very negative many years ago when it was first appearing. But I am a monetary theorist, and I've studied money and banking systems. And so I was familiar with the idea of new emergent technologies coming into the, throughout history in the payment system. And so I decided to look under the hood a little more.
Right.
And it was then when I started to study it in a little more detail, I kind of started to realize, well, wait a second, this is something a little bit different in some sense, and maybe deserves our attention.
Right.
So that was when when I started to read more about it that I basically became. I wouldn't say I'm. You mentioned I'm pro.
Okay.
I would be
almost there.
Maybe be a little more. I'm agnostic. Let's say.
Okay.
I can kind of see perhaps use cases, but I also don't. I'm not one of the fanatics that believe it's going to cure cancer or anything like that.
Okay. Well, that's pretty neat. So you kind of got into it, read about it. A lot of us get into that rabbit hole where we're like, wow, this is really interesting. And then you dive into the back end and realize it is something that can sustain. So you're not technically pro, but what does make you feel that this is an optimistic way for a currency to go?
Well, at the end of the day, when you study kind of the deep theory of what currency is, money is, what role it plays in society. What monetary theorists will stress is that money is ultimately just a form of information. And it's either encoded in various ways, in ledgers, in bank accounts, or encoded in paper bills that reside in our pockets. And that what we're dealing with here is basically an information transfer system. Whether or not these are the information is being debited and credited across a set of electronic accounts in the banking system, or whether or not this information is being debited from my pocket to your pocket in a peer-to-peer transaction of paper currency. So monetary theorists have understood that kind of basically money is information, money is bookkeeping, money is record keeping. And what's interesting about Bitcoin is that it decentralizes the bookkeeping function. So the traditional model is, as you know, the one we're all familiar with, is we appoint a delegated bookkeeper or a delegated accountant. It could be a central bank, it could be a chartered bank, or in general, It could be something like a public librarian. We delegate and designated a trusted historian to kind of look after and serve as a gatekeeper to this information that we're interested to manage on behalf of society. The cool thing about Bitcoin is it decentralizes that responsibility.
Right.
It's kind of more of a communal model. It says, look, instead of relying on a trusted third party to kind of manage this database, maybe we can decentralize the function and permit anyone in the community to partake in this effort for the communal good. I thought that was a very intriguing kind of model.
Yeah.
I've kind of seen historical precedents. I've written about it before, but what's really new about Bitcoin is it's kind of levering up the technological innovations in computer storage, in communications, in cryptography. It's kind of levering it up and permitting it for this communal model to kind of scale on a much larger scale than it was otherwise possible.
Right. So as you mentioned, you're kind of are getting rid of that third party with Bitcoin and the blockchain. So is there any talk with the Federal Reserve banking system or any back-end talk on how this would be able to overtake that older theory of the third party, just because it's more reliable, secure, people can't alter information, and it's also traceable for Federal Reserve banking? You would assume that banking and DAs would like to have a currency that's traceable for any kind of people doing things with money that shouldn't be done.
Yeah, so I'm not familiar with anybody within the Fed system, taking this technology very seriously for this purpose. I think the people like myself, for example, are a little bit skeptical on the applicability of this technology for central banks. And the rationale I have for this is, you either trust a central bank or you don't.
Right.
If you trust a central bank, it doesn't need to decentralize the record-keeping function, because decentralizing it, while it has certain advantages and certain cool properties, it's also typically very costly.
Okay.
To achieve consensus on a database, imagine you're in a room full of people and you have to come to an agreement over the history of what happened in the family in the last, as opposed to having the mother or father kind of say, look, this is what happened, I'm going to write it down.
Yeah.
It's much more efficient to have a centralized record keeper, and for security, they can use all the latest cryptography technology. They can hold multiple copies of the ledger. There's all these stuff that you can do, but it's just inherently more efficient to have a centralized delegated record keeper. So if you do a central bank, if you do trust them, and I've often joked, why would you expect your central bank to steal money from your account? Because we can print all the money we want. So,
right.
if you trust the central bank, then there's really no reason to go to this model. The value of this model really emerges in environments where, for whatever reasons, perhaps you don't trust delegated authorities like a central bank or the banking system or any central authority. That's really where the value of this model comes into play. So, in some jurisdictions, perhaps like Venezuela, for example, maybe there might be a good reason to kind of not be as trustful of the institutions, and this type of technology might provide the people of these types of jurisdictions kind of a substitute way of bypassing kind of the government, essentially.
Yeah.
This is, I've argued in the past that this might even be a good thing. Well, obviously it could be a good thing in the sense that it permits individuals to bypass malfunctioning governments, but it's also a good thing because I think it not just for developing economies but even for the United States and other developed economies, it could serve as a discipline device, as a threat, a competitive threat. That kind of says, listen, you better make sure that you continue to manage things in a responsible and efficient manner, because if you don't, kind of there's this lurking technology out there that's ready to kind of pounce.
Right.
And so I kind of think it's kind of good in that sense.
Likewise. So in that sense, when you have that other alternative, do you see that possibly taking over the banking system, and could it?
It's kind of tough because, not really. I mean, it's not entirely clear. I mean, the model, the banking is something it's a strange creature, banking. Banks actually are in the business of monetizing illiquid assets, so they actually create money.
Right.
So and people find that function kind of very useful. If I want to have a loan to start up a restaurant, I go to a bank and I present my land and my building as collateral, and the bank just presses a little digit and poof, a bunch of digits are created, and that appear on my deposit account as a loan, and I get to spend it. And that's actually kind of how the economy functions. In a Bitcoin economy, there's going to be really, I mean, there's nobody, let's suppose Bitcoin, for example. I mean, I know there are other cryptocurrencies.
Right.
But there's no, as you know, that the money supply is basically fixed by algorithm. And it's basically the supply of money is growing, but it's basically going to be capped at some level. So there's no notion of creating money. And so kind of it's going to be very hard for, I think, a bank like Bitcoin is a very good for transferring information in a trustless manner for debiting and crediting accounts. It's not a very good system for extending credit to potentially credit-worthy projects, because that requires trust.
Right.
So I'm not so sure that the Bitcoin per se is going to displace kind of the credit function of banks. It may, where it's going to compete more is on the payment side, like processing payments. So I actually don't know what's going to happen, but I mean I can kind of potentially see some sort of coexistence. But whether or not Bitcoin might completely displace the banking sector, I don't know. That's a little more speculative. I'm not sure about that.
So based on your financial background in the banking system, like you said, money prints, there's no limit to it. But with Bitcoin, it's scarce. There's only a certain amount of these coins, and every 4 years we're seeing a halving, which is upcoming in May 2020. So would you see, like you said, you're not sure if it would compete with the dollar bill, but maybe do you see it competing with digital or gold?
Yeah, actually, I kind of do. I've written before that the Bitcoin is probably, there's some reason to believe why it's not a very good monetary instrument. I know this is like a sweeping statement. I probably don't have time to justify it all right now, but we've had experience in the past with gold standard regimes that kind of have, arguably not worked so well. And of course, present day arrangements, there's also flaws in these, but by and large, this kind of fixity, the fixed money supply model, turns out to be not a very good monetary instrument, basically because the price is very volatile.
Right.
You can either have a fixed supply and a very volatile price, or you can have kind of like a fixed price and a volatile quantity.
Right.
And for a lot of our transactions purposes, we prefer kind of stable prices. I like to know that my rent is going to be this, and that my wages are going to be able to buy the grocery bill. So for monetary transactions, I kind of like relatively stable prices. And for that, you need kind of an elastic currency, something that grows and contracts with the demand. Gold is not like that. And gold, of course, is very volatile. But what gold is used for primarily is not to use as money. It's used primarily as a store of value, as an investment, as a hedge, for example. And I think Bitcoin really does compete along that dimension, and even more so because Bitcoin is much more fungible, and it's I could see it as being a place, a go-to. I've written a blog how Bitcoin could serve as a safe asset in the sense of not in the sense that the rate of return doesn't fluctuate, but in the sense that in an economic crisis, people would fly to the relative safety of, say, an asset like Bitcoin that's kind of free of government interference. So I could definitely see a role for Bitcoin in wealth portfolios as kind of a substitute for gold and silver, other precious metals. As a monetary instrument, I'm a little less, more skeptical about that, but who knows?
Who knows? So we see the IMF stating that crypto may one day reduce demand for central banks. How do you think decentralization will play a role in the future of currencies, banking, and the way transactions are made and tracked?
Yeah, I mean, that's, nobody knows for sure. Nobody knows for sure how the future is going to develop. I'm a little bit skeptical that the centralized model, trust-based model, is going to go away anytime soon. People love their intermediaries. This is evident even in this Bitcoin space. If you ask most people how they hold a Bitcoin, how do they hold Bitcoin?
Exchanges, wallets.
Really? How about Coinbase and?
Coinbase and Exchange.
Yeah, well, they go to exchanges. They go to Coinbase. They go to intermediaries, right? I mean, they trust Coinbase.
Unless it's a non-custodial, kind of like Shapeshift, where you.
Yeah, correct. But the point is that if you take a look at BitPay, for example, for firms, if I want to set up, most firms don't actually accept the Bitcoin. It's intermediated through BitPay, for example.
Right.
And in Coinbase, it's basically an intermediary that offers to hold accounts for you. I'm trusting Coinbase to kind of not steal my money and stuff like that. Some people hold Bitcoin directly through wallets, but the point is that even in the Bitcoin space, it seems to be a huge demand for intermediaries. And so, I've written that I can kind of see, I don't know about displacing all central banks or even most. I mean, I could see, because I do think that they're, a properly run central bank and centralized payment system. We have that almost already, and it's getting better all the time, I would argue, that it's a very efficient model for making payments. One day you'll be able to just make payments costlessly on I think the Fed Now new payment system we have coming out, are very, very low cost payments, instantaneous, real time. I don't think that's going to be an issue. I don't see how, say, a Bitcoin is going to compete against that, primarily because, as I mentioned, the exchange rate for Bitcoin just fluctuates too much. It might threaten the central banks of some countries that haven't shown the same sort of kind of responsible sort of managing the money and payment system. It might have some implications for the demand for currency, not just Bitcoin, but also, there's a whole number of other altcoins that are out there. So I just have a hard time seeing, at least in the foreseeable future, kind of, this innovation displacing central banks or other intermediaries. I can see it, in fact, one of the good things about it is it promotes innovation in the space, and these intermediaries actually respond to the competitive pressures that are coming because of these new technologies.
Right.
But I mean, I think that I would argue that this is not something that's new. This is something that's been happening for hundreds of years. So this is all part of just, I think, a natural way that the money and process that money and payments have, innovations in money and payments have evolved over time. So I think at the end of the day, the consumers and people are going to benefit from it. And I think that's something we can all celebrate.
Yeah, definitely. And so is the Federal Reserve working on any crypto coins or setting up nodes as we see the SEC attempting to do? I've heard something about FedCoin. I'm not too sure about it, but I'm just
FedCoin
curious.
is something that I and others have speculated about as just speculated about. But the SEC is thinking about this. I haven't heard about that. That's interesting. I haven't heard about any central bank specifically adopting, setting up nodes and stuff like that for a FedCoin. What you do see are some central banks like the Riksbank in Sweden, for example, it's toying with or implementing these ideas that are called central bank digital currency. Mm-hmm. But this is actually philosophically something distinct from Bitcoin and these other blockchain-based payment systems.
Right.
When people talk about central bank digital currency, almost always, they're just talking about opening up permitting people to open up bank accounts directly with the central bank. Mm-hmm. And the central banks, of course, already have digital money. Most of the money, in fact, in existence today is already digitized through the banking system. And central bank digital currency is just this idea of permitting individuals to hold accounts with the central bank directly. So, imagine a world where you and I both have accounts with the Fed, and if I want to make a payment to you, it's just going to be debiting my account and crediting yours, real time, right. Zero cost. That's what they're talking about.
Okay.
This is very distinct from Bitcoin and blockchain, where, when I was talking about debiting my account and crediting yours, mm-hmm. I'm trusting the Fed to do the proper debiting and crediting.
Right.
Which I think is the efficient thing to do, because we're just talking about debiting and crediting accounts. Mm-hmm. It's not rocket science, and I trust the Fed to do that. Blockchain or Bitcoin stuff is, again, the philosophy here is to decentralize the clearing. Why a central bank would want that is kind of almost beyond me.
Yeah.
Because you're basically saying, you know what, I'm a central bank, and you can't trust me.
Yeah.
But if you can't trust me, I say dismantle the central bank. It's like,
right. It's kind of a...
let the people let Bitcoin and other types of innovations serve those constituencies that kind of value the properties of the money and payment system that Bitcoin or Litecoin or these other altcoins have to offer. Let them serve their niche markets, mm-hmm. and let competition prevail. But I don't think it's something that central banks should get into.
Well, thank you so much, Mr. David, for your time today. It's very valuable information from the Federal Reserve Bank of St. Louis, and I appreciate you so much.
Joel, thank you. It's a lot of fun. Thank you.
Thank you.